let's get the management of StoveKraft to discuss their numbers. Mr. Rajendra Gandhi, the MD at StoveKraft, joins us on the show. Hi, Mr. Gandhi, good morning. Thanks so much for joining in. Well, the past quarter's numbers are a little bit impacted because of the IT raid. But for the year, earlier you had told us that you're expecting to grow in double digits and margins could be in the vicinity. EBITDA margins could be in the vicinity of around 11%. Do you want to change that guidance? Because as of 9 months, you have grown at around 3 to 4%.
Yeah, the growth has not been in line exactly with our plans, but is also to do with the way the company operates. We are a cost-plus company. There has been a little softening on the cost, and we have grown upwards of double-digit, closer to the higher double-digit on volumes, but the revenue growth has been tepid. We believe that in this quarter, we'll be able to cover a lot of it and be closer to the double-digit growth. On the EBITDA number, yeah,
So for the year, sir, you're still saying that you believe you can grow in double digits, or will that be scaled down? Because as of 9 months, it's only 4%. Quarter 4 will have to be spectacular.
Yeah, the fourth quarter so far has been good. I don't want to guide you to be a spectacular fourth quarter, but the growth in the fourth quarter seems to be much better than the previous 3 quarters.
Mr. Gandhi, hi, good morning. For the last many quarters when you've come on, you've alluded to the fact that market conditions are not very positive. There is a little bit of softness which you are able to see. So how much of that is a factor? Because, it'll be important in that sense to understand your ambitions for FY25 as well. What should we expect?
We believe the markets are not very are very strong, but it is not. Neither do I want to suggest you that there is a weakness in the market. We are seeing good growth. I again mentioned you that in volumes we have been growing on higher double digit, and we continue to see the demand. In fact, we are getting into an election year. We believe that the year ahead of us seems to be very, very promising. Along with our plans of launching in all the categories, new products in all the categories, particularly indigenizing several of them. So we believe that growth for us in the coming year seems to be very, very promising.
I know it's a one-time thing, the election bid, but can you tell us in 2019, for example, or other instances where you've seen a big bump up in sales because of elections, and how much?
We believe that historically we have been able to maintain a 19% CAGR for the last 5 years. But for this year, we believe that we can continue to grow at the same number. The opportunity is very promising. More and more consumers are getting into that affordability segment, which is what we are addressing. It is the largest segment. The opportunity in the country, in particular in the cookware and the kitchen space, is for a long time to come is very, very promising.
But somehow, Mr. Gandhi, you are unable to capitalize on that opportunity. I mean, even if you look at your operational performance, right? Same time last year, 9 months of FY23, your margins were about 9.5%. This time it's fallen to 9%. You're not even able to get to double-digit margins despite having such a strong opportunity. Why do you think that is? And by when can you get to 10%, even maybe high teens margins, you think?
We have started the correction process. We have improved on our gross margins substantially. We were at about 32, 33%. We are closer to that 37, 38% now. This is where we wanted to be. So we will continue to improve on our gross margins, and definitely there has been a little overrun with several of new initiatives on new product launches and also on people side. So on these two things, we have become very cognizant of these costs. We believe that we'll be able to control these costs, and with the improved thrust on margin, we'll be able to get to the aspired EBITDA margin levels.
By when can you get to 10% margins? I'm asking because, you just mentioned that you have some product launches as well. So definitely your marketing spends must have gone up. Do you think that will put further pressure on your margins, and will it take you some time before you get to, 10%?
No, we believe that this year we will not be able to get to 10%, but going ahead from the next financial year, for every quarter, that is our endeavor to get to upwards of 10. It's not even 10. We would ideally want to be at 11%.
All right, so average for next year will be around 11%. And I didn't get that number about your revenue growth for 24 as well as 25. What are you guiding for?
For the current year, we will be able to grow a little closer to 10%, if not 10%. But going forward, we believe we will get back to our historical 20%.
All right, and what's the outcome of that IT rate? Any clarity over there?
Yeah, see, we had this raid and the operations for both the factories at Himachal and at Bangalore were shut down for 5-6 days. This just definitely resulted in disruption both on manufacturing and, of course, it was a peak time for us, also related to sales. There was an impact of this in this quarter. Otherwise, of course, we have no anything to affect the company or the numbers. We have no such issues.
Okay, we'll let you go on that note. Thanks a lot for joining in. That's StoveKraft with an outlook on their business. But let's